Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Weekly for Saturday, August 5th, 2023. And our top story today, markets are mixed as the U.S. credit rating is downgraded. Joining me now to help break it all down, talk about markets for the week, is Jane King. She's a financial journalist joining us from the NASDAQ. Well, Jane, it's always great to see you. Welcome back to the program. Thanks so much for joining us this morning.
Great to be here, Jeffrey, as always.
Let's talk. I want to get to the credit downgrade in a minute, but let's talk about jobs. New jobs report out this morning.
Yeah, been a big week, right? A lot of news going on. So jobs report. So the U.S. added 187,000 jobs during the month of July. That is the weakest job growth since December of 2020. So you remember all those people calling for a recession and we had a great job growth and really low unemployment rate. Maybe this is the start of something, but interesting piece of little nugget here from this jobs report. The prime working age Americans, so this is 25 to 54, now back up to pre-pandemic levels. Overall, the workforce isn't there yet, but the prime working age adults back to pre-pandemic levels now.
Well, I'm certainly glad that I fall into that category of prime working age Americans.
Me too.
I'm just waiting for my compensation and wages to catch up. Jane, I wanted to ask you about the being serious too. I want to ask you about the Fitch downgrade of the U.S. Long-term debt. I think it was, U.S. was at AAA. Now it's at, I think, double A plus. I think.
Yeah,
AA
it was
plus,
AAA, now AA plus.
So what, a little bit different and for the reminder for the audience, there are many credit rating agencies, S&P, AM Best, Moody's, Fitch is one of them. So how did the market react to this?
Well, the market was down. So now, and also remember, we had a month of July that was just amazing, 3 to 4% gains in the stock market. So maybe that was the excuse that it took to take some profits off the table. Sometimes things kind of coincide. But what I think is most interesting about this is the debate that's going on. So you had Warren Buffett basically say, we're not doing anything different. This is no big deal. Jamie Dimon called it ridiculous. You had some other people on Wall Street, kind of poo-poo it. Steve Schwarzman, Blackstone CEO, said that, he agrees with what Fitch did, and he's worried about the spending and what Washington is doing. So, and if you look at what Fitch, their decision, they said, look, this has been 20 years in the making. I mean, we've been, arguing about the budget. We've had, gone right up to the deadline numerous times. We've had many government shutdown at one point. The spending just keeps ballooning and made worse by COVID. And so that would led to their decision. And I mean, the credit rating's still high. It's not pristine like it was. It's still high, but, we have a couple more of these, and interest rates, you're going to have to pay more to borrow money, and then that sends you in a downward spiral. So I think it's a good thing that Fitch did this. So I am on the side of Schwarzman, not on Buffett and Dimon. I think that we need to call attention to the government spending because it's just been out of control, especially since COVID.
Yeah, the only thing I would disagree with is it's not 20 years. I think it's been since like 1933, I think 35. Since the reform measures that were put in place as a result of the Great Depression. That's a whole nother debate. Jane, last topic, Amazon and Apple earnings really going in different directions here. What do you got on that?
We've got two $4 trillion companies. So, they both came out like essentially within 30 minutes of each other. Well, iPhone sales are slowing for Apple. So now they did have some growth in the App Store. Their watches are still kind of strong. They'll probably unveil a new iPhone, new watch in September, as they usually do. But they just, people are holding on to their iPhones for longer. And, I've had mine for 3 or 4 years now.
This is a 10. This is an iPhone 10. So I bought this for my wife and I, 2016.
Yeah.
This is 7 years old. It's a little slow, but I'm not going to go out. I don't need a camera. I'm not out there taking selfies. You never see me doing that.
Yeah, mine, is like 4 years old, and I don't know, maybe I'll get one this year. I might wait another year. We'll see what kind of compelling features it has. But Apple, that's 50% of its sales is the iPhone. So, it's a concern. And then Amazon, better than expected. They did a lot of cost cutting and a lot of job cuts. So they really beefed up operations during COVID, maybe too much. They had to cut back on some of that. So now it seems like they're getting things in better alignment.
Yeah, it's just amazing. Apple has been that stalwart, and you mentioned billion-dollar market caps. I mean, or $4 billion market caps. Just absolutely amazing.
Yeah.
Interesting to see the different directions they're going in. Jane King, always a pleasure chatting with you. We're going to miss you next week, but we look forward to having you back on the program again very soon.
I'll see you then.
Thanks, Jane. Great to see you. Thanks for sharing your perspective. And when we come back, we'll take a look at some of our best segments for the week. You're going to want to stay tuned right here on BRN Weekly. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network. Welcome back. This week we discussed how depression related to traumatic brain injuries is very different. Let's take a look.
Yeah, so psychiatrists have been trying to classify depression for over 100 years, and we've been partially successful. Certain classifications end up being meaningful, others don't. And one of the challenges over the years has been that that we didn't have a good neurobiological mechanism to look at it. So people were classifying things based on patterns of symptoms that they were noticing, or based on, like you mentioned, triggers or things that might be contributing to the depression. It turns out that regardless of what the trigger of your depression is, whether it's related to emotional trauma or whether it's purely genetic or something else, it seems to lead to similar types of depression, or people can still get multiple types of depression either way. And so we as a field have been spending a lot of time trying to define those different subtypes using different biological approaches. We haven't converged on a complete answer, but what we found in this particular study was that in the case of traumatic brain injury, there actually is a pretty clear physiological distinction, which maps onto a clinical distinction that we've known about for a long time. One of the most common causes of brain injury in this study was military service. But sports injuries, motor vehicle accidents, physical assaults, all those sorts of things can also cause a brain injury. And it's well known that people with brain injury are at much higher risk for depression in the long term. But we've known for a long time as neuropsychiatrists and behavioral neurologists that it looks different. There are certain differences about these patients. The most obvious one is that they don't respond as well to treatment. The medications and psychotherapy that work for major depression without a brain injury don't seem to work for depression after a brain injury. And so these people are struggling with sort of chronic depression that doesn't respond to treatments. There are also certain subtle differences about their symptoms that you only notice if you're sort of an expert seeing these people all the time. And that's what led us to say, okay, you know what? Many of us have been seeing these people and thinking they look different in various ways. Let's see if we can go find a physiological distinction too. In this study, we found that PTSD was an independent driver of everything that we were looking at. It turns out that traumatic brain injury and PTSD are two totally independent things that can independently cause a lot of these symptoms. And that was another thing that partly motivated this, is that for a long time, people were saying that TBI is not causing depression. It's not the physical damage, it's the emotional trauma associated with the brain injury. Somebody who had a brain injury in the military, for example, they must have gone through a really intense emotional experience also that led to that injury. But it turns out what we're finding here at the study is that there are two totally independent things which warrant two totally independent treatments, and we should be giving each of them independent attention.
And we also discussed how engaging in creative activities is really great for your mental health. Let's take a look.
About half of the population, in our surveys done by the American Psychiatric Association, they report themselves as anxious, and the anxiety level has increased definitely in the past 2 years or more because of the pandemic, and also because of the climate crisis and the political situation. These really worry a lot of people. Substance use, is a major problem. It's as much of a pandemic, as the COVID-19. So we have to keep that in mind also. It's important, that health is not simply absence of illness. There's a concept of positive health, including positive mental health and creativity. One should have fun in one's life. One should have joy. And it's possible for people to have fun and joy, even in the face of adversity, and even in the face of severe mental problems or physical problems. And we see a lot of people with very advanced disability or advanced stages of illness who are still able to have fun in life. And this is where creativity becomes quite important. And also, there's a concept in neurology, or in medicine in general, use it or lose it. If we do not use some brain functions, then you are going to lose it. One of the things which we worry about as we age is dementia, and creativity. Activities can play a role in slightly reducing the risk of dementia. Nobody can totally avoid it. If you live long enough, it's a high probability one would develop it, unless one dies of other causes. But on the other hand, we want to gain more quality years, with less cognitive impairment, as well as more physical fitness, and creative activities will become quite significant in achieving it. The body cannot always be in a state of stress. As we all know, sleep is quite important because people who sleep well, like at least 7 hours a night, they are more productive during the day. Their actual efficiency goes up and their mental health also goes up. Like that, engaging in creative activities, in stress reduction techniques, these again, not only they kind of guard against disease, and in reality, they make the person even more productive and efficient in what they do, in problem solving, and if they are doing whatever work they are doing.
Well, certainly great segment, great guests, of course. I want to thank all of our contributors this week. And that wraps up this episode of BRN Weekly. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news and lifestyle, wellness, finance, tech, so much more, and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? Well, of course, visit our website. We're back again tomorrow for another edition of BRN Sunday. I'll be joined by the Legal Eagles, and then we'll break down some markets and a lot more. You're going to want to tune in, of course. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.